Hi everyone, in this video I'm going to tell you about financial intermediaries. Now before I start, I'd like you to know two things. First is that if you are interested in trading in equities, that is the stock market, then you have to have a demat account open. Next, if you want to invest in mutual funds, it is not necessary for you to open a demat account. Now let's talk about point one. What if you are interested in participating in the stock market, right? So if you are interested in participating in the stock market, the first thing that you need to do is register with a broker. A broker is someone who connects you to the stock exchanges so that you can place your buy or sell call to the broker, and then the broker can transfer that call to the exchanges, right? Now you can open a demat account with any broker you want. You can search for your preferred broker online, and in India specifically we have Zerodha as an example. Zerodha is a renowned broker in India, and if you are based out of US, we have Fidelity Investments. So what happened in the older days was, since the technology was not advanced at that point of time, so what people used to do was they selected the stocks that they want to trade, and they then called the broker up. So for example, you are a broker, then I would call you up saying that, hey man, I would like to buy this stock at rupees 25. So what you as a broker would do then, you would place the order on my behalf, and the order would get placed to the stock exchange. But nowadays the process is fairly simple. What you need to do is you need to go to the online portal of your registered broker, and from there you can yourself place the order. Alright, now let's talk about how the process works and what money does the exchange take from you. So let's understand this with an example. Let's say you have 5 rupees with you that you want to invest. You invest those 5 rupees in a stock. The stock goes down and you lose 2 rupees. You book your position, and now you're sitting at rupees 3, right? You lost rupees 2. So now, although your loss is rupees 2, the actual loss is greater than rupees 2. So what happens is that when a successful transaction happens, whenever your buy call is fulfilled by the exchange. Your buy call or your sell call is fulfilled by the exchange. So whenever a successful transaction happens, the exchange take their cut from it. So the exchange can take maybe 1 rupee, 2 rupee, and so on from the transaction that is happening. Right, you can check out about the transaction or the charges that the exchanges take from your broker's FAQ pages, which are online. So all these regulating authorities that process these transactions take these charges from you, and we call them as depository participants. Now let's talk about point two. What are mutual funds? So mutual funds are basically a collection of funds which are dumped by the public, and these funds are managed by an AMC. The full form of AMC is Asset Management Company. So what these AMCs do is that they collect the amount and they invest this amount into their portfolio. The portfolio consists of multiple stocks, right? So for example, if you are investing in Tata's digital growth fund, then that fund is monitoring all the tech companies in India. So that fund will invest your amount in all the technology companies in India that are out there. So what role does a broker play when you are investing in a mutual fund, right? So a broker, if you have a demat account open with a broker, then some of the brokers already provide the service of you accessing the mutual funds as well. But you can open a mutual fund account with another third party service, right? And you don't need to have a demat account for this. Example of mutual funds can be, just like I just told you, Tata Digital India Fund, SBI Small Cap Fund, and HDFC Small Cap Fund, etc. So in short, mutual funds are managed by an AMC. An AMC can be a parent organization which manages multiple funds. So for example, SBI is an AMC and it manages multiple funds: SBI Small Cap Mutual Fund, SBI Large Cap Mutual Fund, and so on. So this was all about financial intermediaries. In the next video, we are going to talk about why do companies go public.